What is up, everyone? I'm just going to record this just in case because last time I did a stream for the weekly update, things went a little awry. It's Monday, markets were closed, or they closed early today, pretty much now, due to Martin Luther King Day here. And it's January 20th, so that means it's Trump's inauguration. What a wild ride over this weekend. Millionaires were made overnight in the crypto meme space. There's a lot to discuss. I'm going to be breaking down mainly from the future standpoint. We'll take a look at a few of the equities from the larger perspective, talking about SPY, triple Qs. If you guys got that or were there last week, I guess, when I was doing this live, we broke down some of the scenarios that played out pretty well. Along with the newsletter that's available to everyone that is in our free community at community.tradeproacademy.com that came out this weekend. So if you read that, you got a decent little outlook of what I am looking for. But to add to that, we're going to be going through a little more deep dive into futures and what is going on in general. So this past, we'll go through some of the news for the past week. We'll take a look at what's coming up because the Fed is going to have a rate decision on January 29th. So not this week, but the following week. So this week's a short week. Last week we had a lot of data, and over the weekend, like I said, millionaires were made. Going into Trump's inauguration, he launched his own meme coin. Melania launches one. There are some out there, I don't know if they're real or not, from Ivanka, Barron, and a lot of these went 1,500 times over, right? Trump's meme coin went to about $70. I don't fully know where it's at right now, but a lot of money was made on these memes. Even last night, I think Melania's dropped and it went like 1,000x or something, if I'm not mistaken. So the pariah around all these meme coins is huge right now, and a lot of people are making some good cash on the Phantom app. I've seen a lot of posts and whatnot. I haven't really partaken. I'm still a fart coin enthusiast, but other than that, overall, some of the news that came out last week, we'll take a look at that and what is going on for this week, the week ahead. I think that's a very important thing to take a look at. Let me just see what's going on here. So last week, one of the major news events that did come out was the inflation data, right? The CPI and PPI. The CPI made some headwinds and a ballistic missile to the upside, realistically, leaving behind. You can see this is the overnight session pre-market on the 14th, right, that we had this like huge push to the upside. We saw that quote-unquote inflation was cooling. We had strong bank earnings out of JP Morgan, Goldman Sachs, Citigroup, Wells Fargo that helped surge this upside and hold up this upside. S&P, triple Qs flip. Tech is still a little on edge right now, but the biggest, and oil also popped, but the biggest thing was the inflation data. So the numbers ticked slightly lower from the expected, but the year-over-year core inflation slowed down a little from 3.2 to 3.3. The core inflation, it was a slight acceleration from November, but the core inflation, less food and energy, rose by 0.2 in December, a tick lower than the prior month and the smallest increase since July. So all of this data appears to be not super significant enough to convince the Fed to cut rates in the upcoming January policy meeting. Like I said, January 29th. Right now, the futures are pricing 100% chance that rates will remain unchanged at this January meeting. However, the December numbers provide some optimism that the Fed is still making progress on bringing down inflation following several months of elevated readings, which keeps the door open for a potential rate cut this year. We also saw just continued advancement. We looked at breadth advanced as well, but let me just turn this down. But one of the main figures right now is that the question behind, are we going to see numerous rate cuts this year? Initially planned, there were 3 to 4, I believe. Right now, we're pricing in, I believe, like 1 or 0, even with Bank of America going as far as to say that we're going to see a rate hike this year, which is a little ludicrous in my opinion. But generally, we had a lot of weakness out of Apple, which was a surprising little move. And the inflation data is kind of what's steering things clear. Now, TikTok is also restoring services in the U.S. less than 24 hours after going dark in the US. The short-form video sharing app is back online. President Trump's final decision regarding the ban on the app remains to be seen. Still, he's promising to use an executive order on his first day in office to pause the federal ban and allow BitDance a 90-day extension if it has a viable sale underway. As a result, TikTok and its service providers have enough comfort to bring the app back online as the details are sorted. So I'm talking while Trump's inauguration is going down. I'm not watching it naturally because I'm here, but you can watch it live, if I'm not mistaken, on YouTube. In terms of news this week, like I said, MLK Jr. Day, markets are closed. Well, the stock market was closed. Futures were open up until recently here. There's no major economic events tomorrow. We have ECB Lagarde speaking on the 22nd. We've got some initial jobless claims. We've got Bank of Japan's interest rate decision, which is on 23rd. That's going to be a pretty important event considering what's going on in Japan with the expected rate hikes, in a sense, right? They've been at pretty much zero for years now. And then earnings this week, we've got the continuation of some banks, right? We've got Charles Schwab, we've got 3M, we've got Capital One, United Airline Holdings, and Netflix all on Tuesday. On Wednesday, we've got Johnson & Johnson, Procter & Gamble. What else do we have? On Thursday, we've got American Airlines, Alaskan Air Group, Freeport, McMoran. What else do we have here? Texas Instruments. Then on Friday, Amex, Verizon, NextEra Energy, and then some healthcare names. So not the craziest earnings week, but we are starting to trickle into tech, with Netflix being the first of the large ones to report. Big tech here is holding out relatively okay in the grand scheme of things. It hasn't really pulled back too much. You can see here I've made a little matrix regarding our Mag 7s. Nvidia here holding fairly well, getting extremely oversold towards these bottoms around the 130. Apple, though, made headlines here with a pretty drastic drop in comparison to the rest of the names, right? The SPY fell about 5%, the triple Qs fell about 7% if I'm not mistaken, and a lot of that probably due to the downturn in Apple, along with some Microsoft weakness that can't seem to catch a bid. But names that I'm looking at are going to be Meta, Amazon, and Google this week, along with Tesla. These bottom four down here look pretty strong. They're holding out in this like tight little quote-unquote bull flag. I don't really like these patterns, but we'll call it what it is. We're holding just under or just around the 590 on Meta. If we can get expansions above like 625, I think that this upside can continue. We're in a position right now where we're at a pivotal point from this upside movement based on the inflation data that's pretty much led the charge. And the question is this going to be a lower high, or are we going to continue the movement higher? The way that I see it, I think that we have some kind of post-OPEX bullish movement into mid-February to continue the seasonality of the market to the upside going towards the end of Q1, which is typically a weaker part. I would like to see highs get created by that time, so right now I am positioned more bullish. Looking at this with the potential to make a higher low based on that CPI data, because we've seen a lot of gaps everywhere. That's a main point of discussion today. So Amazon right now, it's creating some kind of like bull flag. It's getting pretty oversold on the way up, holding this auction low around 216. So about above 228, I think that there is some potential, along with Google above the 200 area, holding its auction low at 190 pretty well. And Tesla holding the auction low around 375, which I think can open up some of the upside should we start moving above that 430 area. So I like big tech right now to watch. It's going to be a very closely watched market, if you will. Closely watched names of big tech, as Netflix earnings are going to be the first to come out here. So Netflix has been doing fairly well after its last earnings report here. Continual gradual rise to the upside with a lot of oversold momentum down into 820. So this earnings report is going to give us a little more insight on what we can expect. So let's take a look at the SPY and the triple Qs before we jump into the futures. We'll take a look at some of the other things like value. I'm closely watching value with the Dow Jones, along with, well, not value, but SMH, which will help me understand a little more what the health and trajectory of this market looks like. So last week I outlined that 580 region realistically. That was one of my main points of interest to see hold out. We have this anchored VWAP at 572 area. So we just came just shy of that on the low tick here. This was on Monday before starting that rally higher. And we got this larger gap here. This was the CPI gap. But right now we're holding into a major auction to the upside here. You guys can see this is the main auction, and the bottom band of it is at like 578. The top band is around 600, which we currently immediately failed here on the SPY. We'll see what happens tomorrow. But right now, I do like the upside momentum. If we can break the high even just by a bit, go trade into the 615 before we see that topping, if you will, going into the end of Q1. That's kind of what satisfies me. Last week, what I talked about was, listen, we either trade 572 and hold that anchored VWAP, or if we can get a bid and a close above 580 on the SPY, I think that's what opens things up. Now, based on the information that's come out here, we have a gap. Now, the gap doesn't necessarily have to get filled, but I think a lot of retail is starting to pummel into this, getting pretty long here at the top, and creating a higher low would make sense. I'm not opposed to seeing the just complete movement to the upside, but there are two scenarios that I outlined here. They're both necessarily bullish. I think the first one's a little more bearish, where we come into about 587 auction area, 586 auction area here on the SPY. Look like we want to fill the gap, then start catching a bid towards this like minor little distribution that's outlined over here. That would be the immediate bear, get a lot of people excited for that next continuation to the downside and then catch a bid. The best case scenario for the bulls, you can see the auction top somewhere over here, 601, right? 601, 602, if we can get closes above those, I think that generally the SPY starts opening up some of that upside that does take us into all-time highs. I just wanted OPEX to be over to give us a chance for the continuation of the upside spike in terms of some all-time high movement, and then we'll kind of decide what goes on there. I think that a lot of people might be looking at this as an opportunity to start shorting back down at that 600 to make a new low, but I think that many are going to be surprised by the outcome with some bullishness going into the end of January. The Fed comes up January 29th, a few days before the month finishes. After the last Fed event move, I think that they might take more of a dovish stance, right? They might talk up inflation a little, and that would help markets stabilize or continue a little more to the upside. So going into the Fed, I could see a little more bullish momentum. Triple Qs and tech in general, the gap wasn't really decisive off the CPI because there's still a little weakness, especially around Apple. So this one's kind of pulled back a little more. The way that I see it, we had the anchored VWAP, we tested it around 499 and held that pop. I just wanted prices to close above 510 to really open up that upside. And the way that I see it right now, if we can get a close above 527 area here on the triple Qs, I think that we start making a move towards that all-time high. My immediate target's about 540, the prior highs. 550 would be great to see into the end of Q1, and then we'll decide from there. In terms of lower highs here, the bearish potential move to begin the movement back up, I think holds around 510. To be honest, on these triple Qs. So for me, that's going to be a buying momentum area, meaning if we close above 527 area, I'm probably going to start getting longer. If we pull back to about 510, that still induces a long for me. I don't really see this as an opportunity for me to short too much. I think the shorts happen at higher prices right now. The hedging happening at higher prices, getting kind of prepared for a little more turbulence post-Fed and going into the end of Q1 at some point from mid-February to mid-March. That generally is a seasonal point where markets do decide to turn a little. But two of the main things that I look at here is the Dow Jones, right? DIA ETF here. So it's an ETF, a representative of the Dow Jones, but value-based, and SMH. So the health of these and the projectile movement up or down gives me a decent indication of what's going on overall. This has created a massive gap from the inflation CPI news. A lot of people getting oversold here and here at this auction low. So 420 was the area that we were interested in last week, and for a while now, I think that area makes sense to hold realistically around this auction low to continue the upside momentum. It's just that this gap is pretty big right now. I don't think that we necessarily have to fill it, but a slight back end fill potentially into these like 427s or so would present, I think, another more impressive upside movement, and you start moving through, I believe this is the Fed day, you start closing above that, I think that we're gearing up towards 445 here on the Dow Jones. So watching this and watching the strength of it, green days on the Dow Jones helps me look at this in the perspective of more momentum continuation for the overall market. And then whoops, what do we do here? And then one of the last things here on TradingView before we open up the charts and we take a look at these futures is going to be the SMH. So the SMH has plagued for a very, very long time. So this is the semiconductor ETF, and it's a very good correlation in terms of the health and the potential upside or downside, weakness or strength in the S&P 500. As you can see, we've been rising higher lows continuously until we started holding the bottom of this major distribution that's created this balance between around 235 or so all the way up to about 260. So the 260 marker, seeing a close above that area has been pretty tough over the past few months here, and that's what's going to trigger this. Like, if we can go and get a gap fill, I think that's the move that starts the push into all-time highs on the S&P. So this one's a close one to watch. I suggest putting it on your radar and seeing how this thing shapes up. We've rallied a decent bit here on SMH after this last drop, but like nothing's necessarily that more confident of a build until we start start moving up above this green line, above the 260 plus, and start to get closing prints above that area to go and fill that gap left in July, I believe, in the summer at some point. Until that happens, I'm more cautious on the potential upside all-time high momentum move here on the SPY. So let's dive into the futures. Let's do a deep dive on the futures, then we'll wrap it up here. Futures, I'll start with the weekly profiles here. We'll go why don't we go S&P first? Actually, let me find it. Where's the spoos? There we go. These are the spoos. So this is a spoos weekly profile. Now, last week, to start last week, what I was looking for was the 5,800 major area. So 5,800, why don't we draw some stuff here? We'll get extending rectangle. If we can find one, that'd be fantastic. There we go. So this was the main distribution to the downside that we had outlined for last week. I wanted to see 5,800, 5,805 get tested so we can look for the potential long from that area to swing it higher. We didn't quite trade down there, but we started to close above this auction top, right? This auction top somewhere at 58.80 area. Once you start getting session closes above that, that opens up kind of a reversal momentum move that starts to accept into bullish momentum, which is what triggered the idea for the long side. Now, key factor to really, really cement the long side was if we actually get a close above that 59.2025, and boom, that happened on the CPI day. We got this flush higher, and for me, it was just bullish from there on in. We got the move as well. You have this auction block that spans from 59.25 area up to the 59.90. So we continued the momentum higher. We continued this bullish rush through these auctions, which puts, again, continuous upside. And right now, realistically, even if we pull back to around 6,000, which is, it's not super far off, but it is a distant path. If we even pull back to that 6,000, I still remain bullish, right? I remain bullish from the 6,000 area as well as that 60.35 up into 60.70, where we've pretty much we've tested it here today on this short day, and we started to fail. So where does that leave us right now? First, the prior week we had a triple distribution here, and generally when we have triple distributions, the middle distribution is expected to hold. So I'd expect that 6,000 area to hold, otherwise we go and trade into the bottom of that middle distribution, into that 59.55 area. So the worst case for me for the bull side this week, the way I'm looking at it, is that we go and trade 59.2025, and that's where we catch a bid for the higher low, right? But the issue right now is I think that there is a little more downside coming in for the overnight and tomorrow, leading into the session, so we can get better prices into lower prices, because we had a short day today, lower volume, and we got an expansion higher. but we moved above 60.70 and then we failed. So we failed that auction area right into this heaviness of volume from prior weeks, right? This block over here, this heaviness of volume, we failed it, we pushed lower. So initially what I'm looking at right now is a failure from 60.70 to pull us back, right? So far we've held this little minor area where the top distribution of last week started. So the way that I see it is like a sell side comes in around 60.70, we can push down to the 20 or the 6,000, and that's where I'd expect the initial buyers to show up. So right now going into the week, I have a little more bearish, baby bearish outlook, just so I can buy the dip for the swing higher going into that 20 or that 6,000. Worst case scenario, honestly, like I said, 59.25, but the way that this thing stands right now, I think the immediate move is a pull down to get buy side coming in at these lower prices, so heavier volume can come in and actually push prices higher to get a stronger sweep. If we start closing above 60.70, like fair enough, just continue that upside momentum. But right now as things stand, I think the buy side wants lower prices to get more active. So that brings me down towards closer to 6,000 to begin things. If we look at this on the daily chart here, right? The daily chart, you can see how this thing shaped up. Once we got a close above this auction top here around that 58.80 area. This is the CPI day. This is a huge unfinished auction that we saw in the weekly as well. So I'm not saying that we have to go back and fill the whole thing. That's a pretty drastic drop. But like to go into the bottom of this distribution would make a little more sense before we push higher. That doesn't have to happen. I would much rather these guys just start buying at around 6,000 where we have heaviness of volume. Here, we can do this. Where we have heaviness of volume from this overnight. This was the Thursday going into the Friday. I'd rather that hold realistically to get that buy side and push us back above that 60.70. Right now, that failure at 60.70 I think opens up some of the downside where we target 60.20 and then 6,000 for the buyers to step right back in. So I think these pullbacks are going to get a lot of people very bearish, expecting a downside move, and then it's going to whip back up when the buy side has better prices and is able to pump heavier into this market realistically. So those are the areas that I'm going to watch and I have to watch. You have the heaviness of volume that's created around this 60.20.25 as well as a 6,000, right? Otherwise, the thing is, right, this is the issue. If we start losing 6,000, the expected move is going to be down towards that 25, right? So I'd rather not that happen because that opens up still the questioning of how strong these bulls are, which could pull back a little more than I'd want it to. So around 6,000 is my expectation for these guys to try and catch that bid higher. So a fail from a 70-point fail, which seems like a lot, but then the buy side comes and picks that thing up. If we look at Nasdaq next, and this will be the final thing. If you guys have any questions, let me know. But the way that I see Nasdaq is very similar, right, to the S&P. We've got a triple distribution from last week's profile. The middle band of the triple distribution has a higher expectancy to hold, meaning that 21,430 is a decent downside move, which it's pretty far away realistically. I would rather it not come down to trade and clean this. It's a smaller auction to clean. I'd rather not see 21,100. It's a pretty significant drop. So the way that I see this right now is that every time I use it, I can't find it. We have this like major auction right here, right? Something like this. We can group it into two. Why not? Just for now. And then we have the middle band of it, which is important at that 430, where this volume drop-off happens for the middle distribution. So we have this other distribution. Come on. We have this other distribution right now that we tried to move into, and we failed right at this heaviness of volume. So around 730-ish, realistically, all the way up to about 820. 730 failed, so I think on the overnight, they try to sell that area, or there's more of a downside move that goes and attacks towards that 530. 530 to hold, that's fine. I would personally like to see 430 trade on the Nasdaq so that we can catch some of that bid side back to the upside swing. So down into 530 or 430 to begin with. You start losing these areas, you're imminently going to trade 300 and potentially down into like 21,200. And it gets very rocky. I think that big tech right now, right, is watching what in Netflix does for the earnings period, but I think the most immediate move is a bit lower, so the buyers get a better chance to to pick things up, right? Going into a short week, into a new president's inauguration here. And there could be a little more of a sell-off, right? We're going to be watching how this thing reopens on the ETH. But I'm looking at that 730 as an immediate failing point so that we can pull back down. Whether it's like 200 points or whether it's 300 points, I think the dip is going to get bought up. So I'm watching 430, 530, as well as down into that 300. Realistically, I think 430 does mainly hold. I think that's going to be a big area for the buy side to step back in and try to push these things higher. And if we get a weekly close above 850, let's say, on Nasdaq, I think that just opens up the trajectory for that upside swing where we start moving into auctions higher continuously to put us into a new distribution higher and a new all-time high potential, right? So that's the way that I see this market. I am bullish, but I'd be cautious of the pullbacks. Even if they're like fairly large and aggressive, I think that they do hold some kind of major bottoms here for that continuation to the upside. And right, if we clean the auction that fails, then fair enough, we have more downside continuation. But the way that I see it, I think that we're past the OPEX, we're past the seasonal kind of turbulence from the start of the year, and now we can look for a little more of that upside swing going into the end of January, even end of February, to see these guys hold the bid. So far over the last multiple sessions after the CPI, they've been holding the bid extremely well, and I think that kind of movement does continue. So watch for those. Watch how the distributions shape up on the overnight and the daily, and we'll do our live update tomorrow morning and continue for the rest of the week. So I hope you guys enjoyed this update. More to come. Drop some comments if you feel like it, and ideally this stream has saved so that I don't have to re-upload it unlike last time. So remember, check out community.tradeproacademy.com for our newsletter. That comes out on a weekly basis, as well as we'll be doing more throughout the week to give you more updates of what the markets are up to and the positioning that we're looking for. So hope you all had an amazing weekend and are getting ready for the week ahead. I think the volatility and movement is coming out. And remember, don't sleep, because those meme coins are going to rocket and you're going to miss generational wealth. So thank you guys. I'll see you.